The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you got the Dow Industrials up 20, Nasdaq's down 3, S&Ps are up a buck. Gold is down 5.90. We get the bonds going topside once again. 10 years up 17, the 30s up 25. And you can expect a little volatility out here, folks, for the first couple hours. Then I expect this market's going to flatten out. Our own markets, yeah, they were up about, the Dow is up about 30, 40 bucks. I expect we're going to see this market flatten out and probably go negative coming into the end of today. But the market will die on the vine after noontime out here today. Our phone number is 877-927-6648. Give us a call, folks. One that's going on in your world. Now, let's go to the world of gold first because, you know, this morning, the gold contract, they were hammering this contract. It was pretty neat what was happening, actually, if you're watching how this thing was playing out. They were hammering the contract prior to the jobs number coming out. And what the market was doing out here was coming into the swing low that was laying out here from going all the way back to March 17th. That swing low, the high, it's March 18th actually. The high of that swing low, that's how we came off the bottom, folks. We had come off the bottom, the bottom was established on March 17th. That's when we went to 1143.50 on this contract. The top of that was 1159.80. There's monster volume right there, by the way, okay? When that went topside, that was really a really sweet move. Well, what do? Man, they nailed it all the way down into that deal. You know, yesterday we had got a call and we were talking about the XAU, the HUI, and those things were a disaster, okay? Bottom line, there wasn't enough juice. And if you want to see something that's amazing, check this out, because this is really cool. This is what I was looking at this morning. And if you happen to trade the Nadex product, folks, this was the ultimate time to trade the Nadex product, okay? If you haven't traded it yet, go over to our website at TFNN. You can have the banner on the top, on the side. Bring the account up. They'll put $25,000 of paper money into it. You'll start understanding how these contracts move. Because what you had there is this. It's all about defined risk, okay? And when I was looking at this contract this morning, I'm saying to myself, man, this is a trip. Because the last time that we had any juice on the way down happened to be 1165.40. That was done on June 30th, okay? So they're slamming the baby down, and so my choice this morning was like, okay, am I going to go in the futures market through the futures, or, you know, do I want to go into the Nadex market through the optionable contracts? And I trade both of them, okay? What happens is this. You're always looking for the risk versus the reward. Well, the risk versus the reward, bottom line, was in the Nadex brand. And sure enough, man, you hit that baby. And just so you understand, so the contract itself, okay, you know, if you trade the contract, you know, 4,100 margin, you know, you get $1 a point, okay? So, you know, it's that $100, okay? It's $1 a point. Bottom line, it's good money. It's good money when it's going up. It's bad money when it's going down, okay? And in the Nadex product, bottom line is that you could put a trade on. I put a trade on. I think I risked 340 to make 440. I can handle 340, you know what I mean? Especially if it's going to get croaked. Bottom line, that's per contract, by the way. Bottom line, for all you gold bulls out there, metal bulls out there, we got a gift from the trading gods. And we needed this gift, folks, right now. I mean, right now. There's no two ways about that, okay? The cool thing is that what you're going to have is this. You have a test of the low. You have it on lighter volume. So all the parameters in place. Well, you have it on lighter volume. And what we had is that we had that sign of strength on June 18th. So what that sets up, that's going to set up a run to the 1204 level. More than likely, it's going to set a run for the 1232 level. And what we'll see is that if this is how we're going to launch off the lows. Let's go. We'll take a look at the GDX. The GDX right now is up 32. This little baby made it into, I'm going to put this on let me put this on a 2-year weekly. Okay, so if we put this on a 2-year weekly, this is a classic. You know, the low out there was 1645. We've hit 1726. You're going to do it with dramatically lighter volume. And, yeah, the GDX has 22 into it. Not a bad situation. If we go take a look at let's go take a look at a few of the larger ones that we looked at yesterday when one of the callers had called in. Rango Resources. Rango right now is up $1.39. Rango also is at 66.69. No, check this out. This is going to be really cool. Okay, so Rango is coming into the high volume swing low in November. The weekly, all Rango has to do, folks, is get over 67.51. I'd love to see it happen today, because if you had it happen today, that'd be a rejection of the highs of the lows on lighter volume. That sets up a nice move. Anico Eagle. Let's go take a look at Anico Eagle. We put this on a weekly. Anico Eagle. This is a rejection. We're at 28.25. I'd like to see this baby get into 29.13. Yeah. So bottom line is that this came in just in time. You know, the XAU, the HUI, they still have work to do. The XAU right now is up $1.29. You're at 62.66. I want to see that. Look at that. Okay, so that got in this, inside the 62.48. That's it. That's a good one. And you know how this deal goes, folks. Can't bust them down, you're going to bust them up. And it is in the nick of time, man. It is absolutely in the nick of time. This is a trip in itself, man. I'm telling you. Talking about wandering in the desert, man. Be wandering in the desert in a huge way. Yeah, listen, it's all there. The HUI did it too, man. HUI, we're at 147.54. It had to get inside 146.01. We got action, man. We got action. You know what's going to be wild? What's going to be wild here, folks, is trying to, you know, decipher the Greek bailout deal versus where the euro wants to go versus where the dollar wants to go. Because what the dollar has just done, you know, the dollar had spiked. It had to get that test. It looks like it got the test this morning. It was within 2 ticks of the test. So that's saying the test. The way that we'd really understand if, in fact, it was the test is that what we should see now is that as the dollar backs down, it should back down with volume expanding. One of the best things, information-wise, that we had got out here, besides the FTSE doing an ABC structure on the way down, is the bond market. The bond market, we take a look at the bond market. The bond market is screaming that more money is going to get poured into this bond market. And this has been going on now since June 12th. That reversal on June 12th, particularly because it was an ABC structure on the way down, didn't do the whole thing. You know, it's been going down for 3 months. And then you had the monster spike on the 29th. That's setting up a good move. And the first move in the 10-year, I suspect, is going to be 127.23, which is a decent move. So 877-927-6648. Let's take a look at some of the, let's go to the transports. The transports also are basically telling us that this market wants to get into that October 2014 area. So the transports, they can't make it over the 8169. They're at 8139. That is a big number. And then the other one that we're going to really start watching a lot closer is Walmart. Walmart, folks, got down to the 70.36. It's 70.25. It would have to get back inside. And that, by the way, that it got close, but guess what? Just like gold, you know, basically saving itself and the equity saving itself, that's how Walmart would have to get back inside there. It's possible that Walmart just came right down to the bottom of that deal, and you know what? It's not going to go back inside it. the correlation of how you understand whether it wants to do that will be the aspect of how it comes up off of that level. If Walmart comes up off of that level and has light volume, guess what? That deal is not done on the way down. The XLE, the XLF, if we go over to the XLE, that thing is a mess in a huge way. XLE continues to want a lower price. The XLF also wants lower price. The XLF is setting up a nice ABC structure on the way down. Right now we're at 24.73. I expect this baby, you know, first off, it's going to test the low that was generated Monday, which is 24.28. And, you know, we'll see whether it has the juice to basically blow that low apart. You know, so the first, you know, we're into this market right now, all of about 45 minutes. The first 2 hours, you're going to see a little more action here. If we go over and we take a look at the DAX in Germany, DAX in Germany has already failed. DAX in Germany also can be an ABC structure on the way down. Now, the DAX, if in fact that is, okay, that is a smaller ABC structure on the way down. Shanghai last night, the Shanghai, man, they get in Shanghai in a huge way. Shanghai continued lower last night, down another 3.5%. And Shanghai, folks, is a large ABC structure on the way down. It broke its B point, broke with volume. We're at 3,900. That thing's heading for 3,000. That is taking people to the cleaners in an extraordinary way. This Tom O'Brien, this is TFNN. You stay right there, folks. Coming right back. Dow up 33. NASDAQ is up, well, you know, she's down 1. S&Ps are flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 29. You get the NASDAQ flat. S&Ps are down $1.50. Inside the Dow Industrials, strength versus the weakness. Intel's the leader, and that's a dead cat bounce extraordinaire, and so is an ExxonMobil. Intel right now is up 56 cents. You get Exxon up 76. Travelers is up 78, and Verizon is up 31. Taken away from it. On the way down, you have DuPont. That's off 67. JP Morgan Chase is down 33. United Health is off 71, and Apple is down 38. Inside the NDX 100, what do we have? The leader inside the NDX, oh, this is wild. Watch this shake out, folks. The leader is Western Digital. Western Digital is up 224, and we're talking about Western Digital that just went from 115 down to 81. That's a dead cat bounce extraordinaire. You're going to love it. But would you want to dissect and bisect out of this when we were doing this? Is the aspect of, okay, are they dead cat bounces? Are they getting to higher highs? And you can see inside the NASDAQ NDX 100 today, that strictly is a dead cat bounce. Tesla is the number 2 mover inside the NDX 100. Now, that's not a dead cat bounce. That's moving higher. Tesla was up by 644. Seagate Technology, that's up $1. That's a dead cat bounce. And Micron Tech, that's a dead cat bounce, up 0.38. Micron, Seagate, and Western Digital are one of the worst performers on the NDX 100, by the way. Okay, so you can see what's happening there. Taken away from it. On the way down, this is what you have. You have, what is this thing? Holy cow. I got to see what this is. It's down $20. Oh, this is Liberty? It's tracking, oh, is it a tracking stock for Liberty Group is a tracking stock for Liberty Global PLC operations in Latin America and the Caribbean. Let's see this thing. Is that Liberty Media? Oh, this must have just, man, whatever this is sick. Listen to this, folks. We'll get a look at this for a second. This looks like it just went public, and it got, it's going to blow my mind if this is the case. One second, hold on. Public offerings not available. Looks like it's only traded 2 days. And it just went from $40 to $60 to $40. Let me pull the next one up. And the 2 largest ones are Liberty, and then this is down $9. Liberty Latin America and Caribbean Group. The low's 37, the high's 80. Man, what a mess this is. You know what, I don't, this also looks like it's only been trading for 2 days, which is just absolutely amazing. I'll have to do a little bit more work on that and find out what that is all about. But if in fact that's right, it's pretty intense. The fourth laggard inside the NDX 100 is that you have Cognizant Technology. That's down 235. And you have CERN off 73 cents. The aspect of what we're going to have coming into the close out here today. So what we have is this. Now, this is where this gets really wild. If you're doing an ABC structure on the way up, the definition of an ABC structure is whatever way you're moving. Let's say you're moving up or you're moving down. The first leg, you'd have to be moving with volume. If it's an ABC up, you'd move up with volume. You come back with lighter volume. You start moving up with volume again. As you go into the B point, you cross it with volume. The A to B point are straight line moves. The B to C, they go all over the place. The C to D are straight line moves. What we have set up right now inside all the indices is that you have the straight line move from the highs, the high in the SPY that was established out here on June 18th. That was 211. You go straight down, right? We've gone up for 3 days, dramatically lighter volume, and today counts. This is what's really crazy, okay? Bottom line is that the bears, can be happy because you got to a higher high out here. The bulls, you would have wanted this to be down versus up today. So what you have is this, is that the SPY, the Qs, they all got over the highs of yesterday. The SPY got to 208.27. Right now, you're at 207.89. If we take a look at the NDX 100, we use the Qs. What you have with the Qs got to a price point today of 108.32, and 34 was the high yesterday. You're going to have contraction of volume in a huge way. And the real key is going to be, okay, how do we run into the high volume lows from Monday? 877-927-6648. Some of the high volume stocks in this low volume market. You have Apple down 34 cents. You get Facebook down 40. Tom O'Brien, TFNN. We'll be right back, folks.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled the new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the Tas architecture. As seen on Bloomberg terminals worldwide, the Tas Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the Tas Profile Scanner can do for you. Try this product out. No matter what you trade, the Tas Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the Tas Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzamento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Check this number out. This is as intense as you can get. You're gonna love this. Okay, so we have the Greek crisis happening, right? We've been talking about Shanghai, and let me tell you something, folks. Shanghai, is getting toasted and roasted, but I'll show you the correlations. The correlations are always lagged. They lagged 3-4 months, but bottom line is that correlation will hit Europe and will hit our markets. But check this number out, this fact. This is like a sick fact. China stocks lose 10 times the Greek gross domestic product in a month. As Europeans hold their breath awaiting a referendum that will help determine Greece's future in the Eurozone, the stock market slump on the other side of the world is how I'm reading you a story from Bloomberg, okay, as barely ripple in the global markets. A 3-week plunge in Chinese equities has wiped out 2.36 trillion with a T in market value, equivalent to 10 times Greece's gross domestic product last year. What this article goes on to say is that still the closed nature of China's financial markets is allowing the rest of the world to watch and wonder without seeing spillovers into their markets. ... Yet. So let me pull China up for you, and I'll show you this correlation because this is about as intense as you can get. So if we take a look at China at the Shanghai, Shanghai is off the high. The high that was generated is 5,100. So you've come down 25%. And you come down 25%, folks, in exactly 5, 10, 15 trading days. 25% in 15 trading days, right? But it's not done, because what Shanghai had done is it took the B point out with volume. So your A point on Shanghai is 51.78. Your B is 42.64. So we're talking $900. 900 gives you 36.20. That's the first. That's a one-to-one structure on the way down, okay? So we take this up. Now I'm going to put this back 15 years so you can see how these correlations work. Now watch this. This is a total mind blower. If you're in your car, I'll explain what I'm doing right here. If I take the correlation as to the last run up versus down, we hit a 0.786 of the whole move. Now, the correlation I'm talking about is that when Shanghai first topped out in 07, it did the same thing, folks. Shanghai went nonstop from 1,200 then, went up to 6,000, and then came right back down. That correlation, so Shanghai topped out in October of 07, got slammed, by November, it was down 1,300 points by January. It was off 30%. That's how it likes to trade. Now watch this. If I take our markets, okay, because the correlation, you don't, it's not a direct correlation, but the correlation certainly has the ramifications. The reason being is that it's a one-world market now. That's what's going on. Whether it's the funds that are involved in it, bottom line is that you'll see how this thing shakes out. So in 2007, the October is when they started going south. Now, in our markets, folks, what had happened is this, is that we started going south in July. It came all the way back, went all the way topside once again, and we really hung up until like December. It was January, if you remember. I remember this so well because I was short in the market, and it was January 14th that this thing blew apart. And when we blew apart, you could, the correlation was about 6 weeks later. And where would we go? Bottom line, we know what we did. We went from 1570 down to 670. Bottom line, I'm not looking for that type of move. We get that type of move, man, that's going to be really insane. But it is a big move because if you remember the correlations inside the aspect of where this volume was, you know, bottom line, it's a lot lower. I suspect it's going to take a bit more time. But the bonds have been saying flat out that, guess what? The Fed might want to go up, but they're not going to be able to go up because the type of destruction that we're going to have happening very quickly inside the markets, because they'll freak, because they, you know, that's just how it goes. Intraday out here today, you know, they're selling this market. You know, we just did a small ABC structure on the way down, and let's see what we got here. ES. So we're at 2069 right now. At 2069, let's see if we took this little baby out with volume, this little swing point. So we just came into, well, it's not really an ABC down. This thing right now, though, wants to go to 61, you know, so we'll see how this, the next swing point down there, well, it was 69, 68 you swing, but yeah, 61 is game. You know, 60, that's going to be, let me tell you something. You go to 61 out here today, that's going to be kind of a shocker. Because if we actually do get down that low, and if we get that low within the next hour, what that will set up, that'll set up a lot more selling than I expected, than I expect today, coming into this long weekend. The reason being is that I think folks are kind of figuring out that no matter what happens in Greece, meaning it's not going to be good. You know, and what I mean by this is this. I said, so if they vote yes, that they'll go for the, you know, the deal. Well, what ends up happening, you know, the government wants them to vote no. You get a political deal going on. You do a new government. What happens? You vote no. Bottom line is that it's like the Europeans are going to say, hey, see you later. See you, don't want to be you. You know, so this is a, I suspect, you know, when push comes to shove, it looks to me like, you know, the default is going to be on. You know, that's how this whole thing looks, you know, and who's ever holding the bag is holding the bag. And, you know, and I mentioned this yesterday, looking at the faces of the Greek people on TV, it looks to me like most of them have got their money out of the banks and they're sitting on cash. So it's not like it's going to be the end of the world. It certainly will be the end of the world for, you know, people that are trapped. You know, it's just like, you know, having a job versus not having a job. When you have a job, the job numbers really don't mean a lot. When you don't have a job, bottom line is that it's a depression. You know, so it's sad. There's no two ways about that. But bottom line is that I think when you look at the aspect of if they won't give up any debt forgiveness, I think the creditors are dreaming, you know, and I think that's most of the battle. You know, a bigger part of the battle out there is they want the squeeze, they want the interest, they want their principal, and guess what? They're not going to get it. That's the real bottom line. So we'll see if the funds that are involved roll other markets, because that's one way that the currency markets can roll, you know. We haven't seen that yet, you know, whether, and you know, it's real possible that the rolling in markets would not be as intense. It definitely would not be as intense as 98. Because, when you look back at 1998, long-term capital, it's a mind blower, folks, compared to the numbers that we're talking now. That long-term capital, that wasn't a huge amount of money compared to what we have in derivative positions now. Derivative, I don't know what the exact number is, but it's so many more times, X times, you're talking in the hundreds, not in the 5, 6, or 7, in the hundreds you're talking. So I don't expect the markets to roll like that. What I do expect, though, is that you're going to see something come out of left field. And it just, hey, listen, it could just have to do with selling flat out, just selling in the marketplace and pushing paper out. That's what it very well can be. We have, you get a sell-off today coming into this, and it looks like this B2C is setting up pretty well. Some of the Dow stocks, we take a look at some of the Dow stocks. This is what you have. You have Boeing up 23, GM's up 11, Honeywell's down 23, 3M is down 21. You have Marvell up 32. Inside the real estate world, let's go look at these malls, okay? So SPG, this is the largest mall owner in the world. This is Simon's. SPG. So Simon's is trading at 175.78 off 200. We bring this back and let's put this on a weekly first. And what we're going to see, look at this, man. Okay, this is a heads up. This is another heads up that this October level. So the October level on Simon's, the high is 170. And Simon's already hit it. This is another indication. This is a trip, man. This is going to be just so wild watching this shake out. So Simon's has already gone from 206 to 170. 170, folks, was October 2014. That's the high volume swing. It's sticking out like a sore thumb. And it hit it. That's the bottom line. It hit it. Now, as it's hitting it on, let's see, 10 million, 8 million, 5 million. So it hit it with 8 million versus 10. It hasn't backed out of it yet, but that's a decent test. It's going to have to back out of it and get a sign of strength in order to not continue into lower price. So we'll see how that shakes out. But there's another indication for you as to not only the October 14th level is something that you absolutely have to keep your eye on, but that also is another indication that the S&Ps want to run to the October 2014 level. And that level is a mind blower compared to where we are right now, folks, okay? It really is. It's just like, when we do these things, it's like when they get there, it just blows my mind, particularly when you're talking about something that's so far down, because the bottom of that level is 1820. Hey, we'll put this up. This is like crazy. $SPX. Okay, so we're at 2080. The high of the October benchmark we're talking about is 1912. That's down, 160 points. The bottom of that is 1820. That's really a mind blower. That's 1820, yeah, that's 260 points or 2,600 Dow points. 260 points, folks, would be some mind-blowing activity. That's 10% down from where we are now. Now, Shanghai is down 13% in all of 10 days. I don't expect we're going to see that. If we ever saw that, that would be really problematic. You'd see people, and one of the main reasons, of course, that just on small pullbacks is that because we haven't had a pullback. That we haven't, and each and every time any type of pullback comes in, you basically hear folks saying, oh, no, we're going right back up. We're going right back up. What blows my mind is that hearing folks that have been in the market a long time saying that, it's like, okay, so retracements are over, and depending on how long you've been around, folks, okay, there's no such thing. There's no such thing, by the way, not only just in markets, in anything, okay? Things go up, things go down, things cycle of life, all of the above. That's kind of how it goes, you know. So pay attention to it, because when things are good, what you want to do is that you want to do that ABC structure on the way up. You want to get ready. You're going to stay in shape. You want to get over the B point. You want to do it with volume. And if you stay cognizant of that, you can get it done. When things are bad, what are you going to do? You're going to buckle down. You're going to see where the deal is. You buckle down. You stay level, stay focused, and then that reverses also. You know, that just seems, that's everything, you know. Bottom line, you know, it is what it is. And I suspect once you're cognizant of that, you don't have to be fighting it, you know, because the fighting it and the fear of it is the larger problem, you know, and doesn't mean that you have to like it, but you don't have to be scared of it either. That's the bottom line, because then you'll focus with a better mind, you'll be more calm, and you'll realize that, guess what? You're alive and kicking, you get up this morning, you're grooving, it's a great country, it's good life, everything's cool. The thing, what you probably do want to do is turn off the news, okay? Because if you know, the news is so bogus, folks, it blows my mind. I mean, it really has got to the point that that's all they want to sell is greed. I mean, well, not greed, fear. You know, fear evidently is what sells on a continual basis, and you know, it's a drag. That's the real bottom line. Intraday out here today, bottom line is that you're going to see this press lower and lower. With the market hadn't been able to get any traction, and with no traction in the market, we're approaching 10:50 Eastern Standard Time. In the Northeast, folks, they're going to those trading desks are going to be basically going to close them up. They won't close them dead out, but they're just about close them up at around noon. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow is up 6. Nasdaq's down 6. S&Ps are off a buck. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials right now up 15. You get the Nasdaq off 4. S&P's a flat. The DAX, is down about $100. And let's see what she's looking at. So if we take a look at this DAX for a second, let's see where she's shaking out. So. Yeah, this is going to be wild watching this shake out, because what we have is that you have the markets open in Europe tomorrow, and what you're going to do is that this little baby is going to go after the swing low, more than likely tomorrow. Now, if it closes right at the swing, that would set up jumping the creek on our Sunday night, 3 o'clock in the morning when they reopen. That's how that's set up at this particular point. So this is going to be wild watching this whole thing shake out. And you got to remember, what we all already have is that you have the there we go. We have the FTSE already in a confirmed ABC structure on the way down. So we're good. There's going to be a lot of action out here when our markets are not opened. If we go back over to Walmart, we just look at Walmart for a second. The WMT Walmart out here, just on a daily. Let's put this on a daily for a second. So on a daily, this is good. This low, at that 36 cents versus 25 is going to get tested. So this is not over yet for Walmart. So the 70.36, that area will still get tested. The reason being is that we'll come down there on the daily. You have juice down there on the daily. We bring this into the weekly. On the weekly, you also have juice. And the weekly, in order to save itself, it would have to close over 72.61 this week. That's how this is shaken out. Because what that is, that's the high volume week down of October 2014. What's going to be intriguing too, by the way, with Walmart is that you have the transportation index already into that bar, wants to go lower. If, in fact, Walmart does the same thing, then what does that do? That brings your probability up even higher that that's where you're going to go. Maybe we come back from the 4th. What we very well could look at, this could get interesting, too, and what you could look at. Let me just see how far these would be long-term leaps on the downside. Let me just see what kind of premium these would be. And by the way, you'd want to get these when the market basically was flat for a few days. Let's see. So September, October. Let's say if I go out to December. Oh, there we go. This is not bad. So check this out. You could go out to December. Well, here, let me see what this would be. SPY, where that level would be. So that level is at 191. Yeah, it's interesting. So watch what happens here. At 191, that's the highs of the lows, right? If you went out to December and you were right at the one, you get the 207, it'd be $8. That's still, see, it's interesting, you know, that play still doesn't work because you'd still be what you'd be doing is this. Well, if it got down there quick, it wouldn't be bad, but you're still putting up $9. You know, you stay right there, folks. Appreciate you growling and prowling with us. Look forward to speaking to you this afternoon. You stay right there, man. Mr. Basil Chapman's going to be coming up growling and prowling with you. Have a great one. Have a safe one, and be safe when you're driving, folks. Basil's coming right up.